All right. Welcome to Falcon Forward. I was making sure we were actually recording, so we're live in the moment, but you'll be listening to this later. Excited to talk. So today's topic is going to be, I guess we're diving back into some of the insurance details. So this is going to be an educational session if you're in the insurance world or just want to learn more about insurance, but our topic is going to be audits. So we were talking before this about a particular scenario that we're going to kind of raise and walk through. I actually had this exact conversation with two of our newer brokers in the last week. So when I saw that this was the idea, I was excited. So, anyways, Mike, how are you doing? And I'm excited just to dive in.
Yeah, I'm doing fantastic. When we put together these podcasts, the idea is we want to create these for our employees, as well as for prospective employees, that are thinking of joining our firm. And the idea is, what is something that we're working on that came across our desk that required us to do, put on our insurance thinking hats. You can see Peter and I are both wearing our thinking hats today.
Yes.
And came out to a positive outcome for the client that wasn't readily apparent when the situation presented itself. So with that, we thought we'd talk a little bit about your client gets a large audit. Like, what do you do in that situation? So I can jump in and give a little description of something that came up with names and details changed to protect the innocent, if you'd like.
Let's do that. I think that's a good start.
Awesome. Okay, so we had a client that we'd written for a very long time. Number of years, and it represented a substantial account. So they were paying in the hundreds of thousands of dollars of premiums. They had several different divisions with their company, and they had kind of a smaller, represented a fraction of their total premiums was a property management group that they had. And we had written that with the same carrier for a number of years. That carrier based the general liability on payroll. So very common for general liability carriers. They're going to base it on payroll. Sales, square footage is another common thing that they would do, or number of units. But in this case, they're based on payroll, and it was with, a relatively small policy that was not audited. So the carriers, almost all contracts will say we reserve the right to audit, but an account has to be a certain size and premium for the carrier to expend the cost of actually doing an audit. And that's kind of goes carrier by carrier. So the situation was we'd written it with this account for that carrier for a very long time. That carrier non-renewed. So again, something that happens, fairly frequently on things. So, okay, no problem. We're independent brokers. We got a whole bunch of options for these folks. So we went out to the market and we found another carrier that said, hey, yeah, we like this class of business and we'll write it. So we sent over the expiring information to that carrier. We got a quote from that carrier, and coverages were equal or better. Pricing was in the same ballpark. Everything looked good. We issued the new policy. That was done 3 years ago. And so that carrier again has the right to audit. Remember that hadn't been done in prior years. And that carrier is one of those that, most carriers, if they are going to audit, they're going to do it right after. So you even may get the documents before your policy expires. This carrier, for whatever reason, sometimes they take a little while to do so. And then they're pretty lax on letting insureds respond. So 1 year goes by. That policy should have been audited on it. We have our next period. That goes by, that 12-month period goes by. Now we're midway through our third policy year with this carrier, and that audit from that very first year is finally getting completed. And what was kind of escaped everyone's knowledge was the rating basis from the previous policy, the previous carrier, was rated upon payroll. Again, fairly common to do. And remember, that policy had never been audited before. So the customer would give their payroll number each year and pay their premium, and that was it. What kind of escaped some people's understanding was that the new policy was rated upon sales for this company. And so now we're in the third year of this policy. They're finally auditing that first year policy. And what was a 10 grand premium, all of a sudden our customer got a bill in excess of $60,000 for that audit. And so, when something like that happens, just, put yourself in your producer's shoes. What's the reaction there? It's typically not a good one. Not something that people are super excited to see. And, oh my gosh, you kind of go through the whole range of, what, is this right? And so if you're in that position, you wrote this policy for $10,000, you've since renewed that policy 2 more years, and you get a $60,000 bill, what do you do? What's that next step? So what I thought we could do is we'd run through if you're in that same position or similar position, what things can you do to help out your client, help out yourself in your own stress level,
Yeah.
and then hopefully retain that account, which if we, spoiler alert, we were successfully able to do in this situation. So,
There you go.
so first thing you want to do in those situations, Peter, is you want to figure out, is this a forced audit? So, and what's the easiest way to tell if something is a forced audit is, let's say their prior policy was based on, again, we'll use nice simple math here, $1 million of whatever, of sales, of payroll, of whatever. And if you get that audit worksheet back, and it's 1.5 or 2, or it's an exact number. Remember, this is an audit, meaning they want to use actuals. If your audit is using round numbers, it's a pretty good guess that the carrier is saying, hey, we've asked you for this audit information. We didn't get anything back. So we're going to, quote, force this audit upon you by just picking a really big number, usually a multiple of 50% or 100%, or even seeing 200, 250%. So if you have an even number there, that means, hey, someone's estimating something. And it's effectively, they want to send a big bill across your desk to be like, all right, we've asked you for this. You haven't given it to us yet. Here's your big bill. And what happens then is a carrier calls up and is like, what is this? Oh my gosh, I can't, or a customer calls up. I can't believe we got this. What do I do? And the short answer is you call the billing department and you say, or first call the audit department and say, hey, it appears that they didn't respond to this. Can you put this audit on hold? And they may have you call the billing department as well. Sometimes they'll do it automatically on their own. But first thing is we're going to put this big invoice on hold so it doesn't get past due. Then we're going to find out from the auditor, hey, who are you trying to contact at our client? And maybe they had the wrong person, maybe the wrong information, wrong number, etc. But find out, and basically you want to make sure that auditor and insured are talking to each other and that getting them the accurate information. And then you get that audit revised, it comes back at what you had thought it would be, and that billing invoice gets reversed or canceled out, and then everyone is fine. So that happens probably too frequently, but again, not something that's too crazy to get fixed. Some carriers will be a little bulky on it, on doing it, but I've never seen a carrier refuse to redo a forced audit. So, questions at all on any of that, or how any of that piece works?
No, I mean, that's crazy that they just pick a number, but I guess they're in a sense maybe trying to get your attention. So you can actually get
100%.
things
Yeah.
done.
If they sent it for 10% over, a client would just pay it. So they want to pick a number that they know is too big. And there's been a few times actually where I've had clients that probably shouldn't say this on a recording. But let's say they their product did fantastic, way bigger than they thought. And even a forced audit at 2x doesn't equate because they were actually 6, 7, 8x higher. So it was in their best. So when clients are like, well, I'm just not going to respond because this is actually less than what I actually did. That's not how the system's intended. And effectively, when the carrier underwrites that account the next year, they're going to recognize, hey, this is what went on, and you're probably going to get non-renewed or canceled, or you're just going to lose that because you effectively are trying to pull a fast one on your client. So much better to go back to the insured in those instances where you're massively blew through your numbers and say, hey, can we renegotiate our rate on this because things were way better than we thought? That's the kind of step that would get you a long-term partner with your insurance carrier, not just, hey, I'm going to pull a fast one and, basically screw these guys over for this year and then go find a different market. So,
got it. Okay. Good to know.
All right. So next step, what if it actually is accurate? So the client did give the information that was requested and it was a lot bigger than what you had before. So what do you do in those situations? The big thing there is you got to dig into the details. So effectively, you want to get copies of the worksheets from the auditor. What did you base this upon? You want to sync up with your insured to find out, is this number actually accurate? Because this is way different than what you told us at the beginning of the policy year. And find out, like, if it's a work comp, or even general liability, are they being misclassified? So are they being put in a more expensive class code or rating code that would cause the premium to spike up? Is there certain things like, are they including overtime if it's a payroll? Or are they including tips or per diems or other bonuses? But basically, you want to dig into every little piece of data that was used to calculate this and vet it to make sure it's accurate. And there's other things too, like if it's a work comp policy, like are the owners and officers included in this, which some policies are, some policies aren't. Some states will allow you to cap what's paid to an owner or officer of the company, which again, if you're a small company and you're underneath that cap, that never comes up. But if things, keep going well and you start being able to take more money out of your business, then you can exceed those things. And if it wasn't set up that right in the beginning, then quite possibly you can kind of blow through that and not realize that it should be getting done. And then certain states like Nevada, for example, if you don't write a lot of business in Nevada, if you're Nevada based, you'll know that they cap employee payroll at 36,000. But if it's you have a customer that opened up a new branch in Nevada, it's a business friendly state, or you're just kind of dabbling, I'll call it, in Nevada, and you may not realize that there's certain caps that apply. So you want to dig into each piece of that data and make sure it's accurate. And then also just, again, really revisiting those class codes. Are they accurate? Does what the auditor's saying match up with what these employees are actually doing? And anything that's incorrect in there, you need to get corrected. So that's kind of your next step of auditing the audit. So questions at all on any of those categories?
No, I mean, how, in your experience, how often are these audits wrong? I guess it's because, like, to me, it's a lot of work. Like, you get a bill and you almost want to just say, man, that sucks. It is what it is. But really digging into it, I mean, how often do clients want to dig into that? And then part of that is, like, when they do they find issues, and how does the broker, account manager partner with them to kind of get them through that? Like, what's that picture look?
Yeah. So great question. How often is something wrong? I mean, I would venture that almost every audit has some inaccuracies, but it needs to effectively rise to a pain level. And that pain level could be different for each client. In this situation that we were talking about, it was, 6x for the current year, and then multiplied by 3 years, so it was almost a couple $100,000 level that warranted this deep dive on stuff. If it was a $1,000 policy and they got an $1,100, would you go to those same levels? I guess it would depend on that particular client. I could see some small nonprofits that are, hey, we really need to drill this down because this would be devastating to us and our mission. But the point would be is, data is only good as what gets put in on stuff. And if these are humans that are putting these things through, they're not done by AI or anything like that. And so you got to make sure that what goes in is accurate. So long answer to your question would be, it depends on the client, depends on the issue. Certainly, if it's an unexpected large increase, then 100% that's got to be something we dig into.
Got it. All right. I'm only laughing because I think if I start counting how many times we say it depends, it's probably our most famous. But we should rename the podcast. I'm just.
I like that. Right.
Yeah. Anyways, no, but it is true. I mean, everything's variable. That's why we do what we do. So, we got to know the best way through it. So, all right. Well, moving forward on it. I guess where my questions were this week really came up on the subcontractor and the 1099 side. So, working with oil and gas companies, whether they're in engineering or, consulting, I mean, a lot of them utilize in the construction world subcontractor 1099s. I know that's true for other industries as well, but that's where a lot of the stuff I work on. So I'd love to dig into that a little bit more. And I see that it's coming up here as our next piece.
Yeah. So a very common issue with, and this would be on it could be on work comp or GL, would be related to the use of subcontractors. And this is something that, has been a massive kind of tug of war in between states, between employers, between insurance companies, is related to the classification of 1099 contractors. And why is this a big deal? So if you have an employee, you're responsible to provide workers' comp insurance for that employee. You pay taxes on this, so the employer portion of the withholding taxes. And there's, a pretty big cost that is outside of just this, what the employee gets paid or their employee's take-home pay on it. So the end around for a lot of people on doing that was, instead of calling them employees, we're just going to call them subcontractors. And it's perfectly fine to use subcontractors, but they have to meet a definition. And again, kind of getting back to the, is this an employer or a subcontractor? It depends. Going back to our pseudo name of our podcast.
Yeah.
So different states will have different tests that you have to meet. But effectively, if you're hiring someone for a job and they have expertise in this job and they're working on their own hours, you're not telling them how to do the job. You're just, effectively saying, hey, I need this done, get it done. And they come in and get it done and send you a bill. Okay, that's something that could be considered a subcontractor or 1099. If it's, hey, you must work these hours and you must do this, then that's likely employed, regardless of how you're classifying them. So when an auditor comes along, they're not going to necessarily care about the tax standpoint of things, but they're going to worry about the liability, because if you truly are hiring a subcontractor, they should have their own insurance. Meaning that they shouldn't be using your insurance like an employee would. They should have their own. So that's obviously a less risk for an insurance company. So if you're, bringing on people, paying them as a 1099 from a tax basis, but they don't have their own insurance and they're operating under your control and they're doing everything else, they look like an employee. Just like the IRS, the insurance company's going to then say, okay, we're picking up exposure for what this person's doing, whether it be on a work comp side, whether it be on a liability side. So we need to charge you appropriately for that. So easiest way to get around that, or not get around it, but to make sure it doesn't apply to you, would be get certificates of insurance, have a subcontract with these people that specifies roles and responsibilities. And then if you have certs of insurance, then 100% that is a 1099, and the insurance company isn't going to double charge you for that person. You don't have that, and you're getting paid by your customers to do work, and it's being done by people that look and act like employees, even though you're calling them 1099s, then the insurance company's going to want to try and pick that up. And where that happens is in the audit. So if you find your customer in that case, the first thing, and again, large audit, unexpected, and it's due to a subcontractor expense, then the first thing you want to do is go back to your client and say, hey, do you have contracts on these people? Because sometimes, again, a lot audits used to be in person, but now I'd say almost 100% of them are done remote. And maybe the person at the insured missed completing that request, or just thought it wasn't important. So first off is, do they have these certs? Okay, great. We solved that problem. Get them over to the auditor, get that backed out. If they don't, then it's trying to make the argument. Okay, do you have contracts with these people? And if you keep going down the line and they really don't have anything to prove that these people were 1099s and not employees, then what I would do in that situation is go back to the underwriter and say, hey, listen, here's the deal. These people, they've worked with them for a long time. They are contractors. They just don't have the proof. Can we get some sort of break on that rate? Because it's not the same risk. If you say, hey, they do 10 hours a week over a quarter for them, again, that's not like, but if it's 40 hours a week that they're working and billing, and everything looks like an employee, then the conversation with your insured is these are going to get classified as employees regardless of what you call them.
So sidebar on this,
Yep.
Some companies are like 100% subcontractor almost, right? And
Yep.
I come across that. So in those cases, and again, this is kind of off the audit subject, but I have you, so I'm going to ask you. If there's let's say there's a work comp claim, right? And there's an independent contractor agreement that, the independent contractor has to carry their own workers' comp for $1 million, whatever statutory is. But then the company also carries workers' comp that insures or they're putting payroll from the independent contractor into that work comp. Whose work comp responds? Because there's in this case, it's almost like I would say it's the independent contractor, but they're both the same limit. Like you can't, so how would that work? Seems confusing to me, or maybe it's an incorrect setup. I don't know.
Yeah, and it definitely can. And so what large companies or larger companies that work with a lot of subcontractors who source, so almost like these staffing firms, what a lot of them will say is, hey, we know the game here between 1099s and employees, and we know all that kind of stuff. So guess what? We don't care. We're going to require you to carry work comp on these people, even if they are independent contractors, because we don't want to deal with this. Are they employed, not employed, blah, blah, blah. We're going to make sure that you have the highest coverage. So in that is something that's not uncommon, especially in industries where they use a lot of like temp labor or short-term labor, on stuff. And these could be highly skilled. These could be tech people. These, that are working on so don't just think, it's someone picking up trash at minimum wage or something in a parking lot.
Right.
So, and then if there is a claim in those instances and the people have their own work comp, then it's going to dictate, it depends what the contract says between the employer that is carrying work comp and the person that they're subbing things out with. If the contract says, hey, we're going to be primary, then they're going to be primary. If it's unclear, then both policies would likely respond in the event of an injured employee. So But yeah, very common where if it's these gray areas that the big person, the person who dictates the terms, and that people want to work with are like, all right, I guess I got, and as an insurance company, it's actually, those are great policies to write because
Yeah, yeah,
someone is mandating that you have to carry the coverage and arguably you have coverage elsewhere or it's duplicated.
yeah. That's crazy to
Insurance
me.
companies actually like those policies.
Yeah. So like if there were a claim though, could the hiring company then, like let's say of the subcontractor say, hey, it's on you because we require you to carry, the insurance, and then it's basically like, well, you got to go get it handled yourself. Like, is that sort of the workflow, or
Well, it would,
I
again, that's where that, it depends. It depends
yeah,
what that
yeah, yeah,
contract says. If the contract
right,
is unclear, then both
yeah,
policies are going to respond and they'd
right,
probably apportion. They'd say, okay, it's 100 grand. We're just going to put in 50.
right,
Or one will say, hey, you're closer to this person. So you do the whole claim and then we'll just chip in a percentage of what we
sure,
think we're responsible for.
yep,
So again, why is it important to have clear contracts? Because you want to avoid those situations of like, oh man, what do we have here? Well,
yes,
let's figure this out. We want to instead say, oh, our contract says you're primary. We only sit excess. So you handle it all. And if you go out of business or you fail or you blow through your limits, then we'll chip in.
yep. All right. And so this is why, for my two producers that are listening to this, I know your ears are burning as we're hearing this, but this is why on every single submission, we are asking for independent contract agreements and want to review them, because not only does the underwriter care, but we also want to have eyes on it so we know how that's structured and we can present that properly. So it's not a question of just like, oh man, I need more paperwork. Like MSAs, independent contract agreements, JOAs, all that stuff matters. So anyways,
Absolutely.
yeah, just
Yeah,
wanted to
and
kind
a
of
lot
point
of
that out.
people, you like we need to, as brokers to be asking for that information and guiding our clients on it. And yes, we're not attorneys, um, but we've looked enough at these things that we can say, hey, this doesn't appear good. Run this by your attorney, or here's where our
Correct.
concern is. And that's bringing value to clients because if you start out, you hang up your shingle, and hey, I got a client, sweet, awesome. Client says they need some stuff. I go on Chat GPT, get a contract, and client accepted it. Great. Now I keep going on. Now I'm growing. That is not atypical. A lot of clients fall into that same thing. And it's, if we're just assuming, oh, well, these guys, nice company, they've been around 10 years. They've have all this in place. Again, shame on us in those situations, but absolutely we should be looking at that and helping clients out. And it's much more than just, hey, here's your premium, here's your policy renewal. It's, hey, are you
Correct.
set up things? And we've talked probably other podcasts about the importance of how contracts come into play when there's messy claims, and the difference between a good one and something not good or missing is literally life changing for these businesses. So
We will close that sidebar.
yes,
Thank you for jumping off with me. Now, kind of back to audits, right? So
yep,
we've gone through subcontractors and how that works. Now, the next piece of this is the dispute process, right? So,
yep.
what is that? What does that step entail?
Yeah. So any sort of issues that you find out that it's, again, here it just becomes good communication. So I always like to call it respecting the chain of command. So who's the person who put it together? I'm going to go to them first and just say, hey, here's stuff that we found that appears to differ from what you came up with. And was it just a mistake? Great. Let's work it out. So kind of starting with that chain of command. So, but you got to give them that information. So, how do you clearly, concisely present that to them? I always like to do a phone call first and just say, let's talk through this. And man, okay, perfect. Send it over. So you're not just sending someone an email that they're going to read. You want to set the table of how they should be reading this email. And a friendly phone call explaining it to me goes immensely far versus just, I'm going to send something to someone and maybe they're in a bad mood. They just got yelled at by another not nice broker. And here, us friendly broker are trying to help them out, and they're reading this email, feeling like they're being attacked. So have a phone call, frame what you're going to do, and then send over whatever you did. And here's the summary. Here's the data that points us stuff up. Offer to do a phone call to walk them through it. But do that dispute. If there is, some sort of large bill outstanding, talk to that auditor and say, hey, are you going to put this billing on hold, or is that something we need to contact? But you want to make sure that you address the billing piece so it's not going past due, or other installments that they're paying aren't going towards it. You got to put a freeze on that. And then hopefully you're good. They look at it, they agree with you, they fix it, and everyone's happy, and you go on.
I love it.
Yes.
So with these disputes, right? So we've talked before in the past, and this has come up a couple times with prospective clients. Is like, hey, we got this huge audit bill. We don't know where the hell it came from. We don't know why we're getting it. But there's a timing and a place to sort of have these dispute discussions. Sometimes it's like, it's generally not best to do it like right after you renewed. If you can help it, you want to kind of get ahead of it. Like, what are some of the reasons for that? I think it's obvious that there's an incentive to kind of resolve it quickly, but you don't always have that luxury. But when you do, what's some of the timing ideas here?
Yeah, I mean, as soon as it presents itself, you want to get it so it's not
Yeah,
lingering along. But
correct.
yeah, and it's really indicative of when the carrier has request stuff, and then when the client gets around to completing the audit. But yeah, timing is whenever it presents itself of getting on it, just so everyone can get things off their plate for sure.
Okay.
Yep.
All right. Uh, not my most eloquent questions. Now there are cases though, right? And audits can be correct, right? We mentioned, that there can be deficiencies, but if it is 100%, man, it's tough as a broker, I think, to not be able to do anything. I think like that's because like we want to help people. That's ultimately the end of the day what I feel like we're here for, at least for me
Yep.
personally. But like what do we do there when it's
Yeah.
and reality is, hey, insurance is insurance. They put it in their insurance agreement that we can audit and it's there for a reason. But
Yeah.
hey, knowing, and I guess maybe even thinking through this too, Mike, is like on a forward basis, it's good to be able to say, hey, for every $1,000 of payroll, you're going to have, this amount for insurance, that kind of thing. So you can almost plan ahead, but I'm getting off track there, but just
Yeah.
another thing to think about.
No, so in this, if people listen this long to the podcast, first
Yeah.
of all, God bless them. Appreciate it. But
Yes.
this is, I'd say, the most important piece about what we're going to talk about is you have a client, they have a large audit, you've gone through all these other steps, and it's accurate. So now what do? One thing is be like, hey, like, sorry, client, you now have to pay this bill of 6x that you had thought, and not only do you have to pay it for 2 years ago, but you're going to have to pay it for last year, and you're going to have to pay it for next year. Like that is not a fun conversation, and frankly, it's probably a client ending relationship. On stuff because something broke apart, and again, could be the insured's fault. Hey, this is what you always told us you did. But so it's not necessarily an errors and omission on things, but it's something that somewhere things went off the rails, and who's going to be the one who's held fault for that. So this is where a broker has to get creative. And this is where, again, the best part of this podcast will come from this piece is now you got to start thinking like a business owner and thinking like, hey, what can we do here to sell this? So again, you need data for this type of thing. But how has this account performed? Have they had any losses? If they haven't had losses, that's going to give you some ammunition for your argument that you're going to make. If they've had a bunch of claims, then it's going to be very, very tough to do so, especially if the claims were larger than what was expected, because that meant the carrier really wasn't getting enough premium for the exposure that was going on. How long has this person been a client of yours, and how long have they been a client of that particular carrier is another big question to ask. Are there other lines of business that this carrier has with this particular client? Either currently or the ability to write more with that. Like, are there other lines that this carrier could take on? And then, first of all, how did we get here? Where was this missed? Was it an issue with the carrier? In this particular client that we're talking about, what we were able to find out in looking through was prior policy was rated upon payroll, if you remember that. And the current policy was rated upon sales, but that was never explained by the underwriter to us. It was just we sent them accords based upon payroll. We got a quote based upon sales, and there was no pointing that out on it. So we were able to go through and basically arm ourselves with that information, and then we talked earlier about respecting the chain of command. So first we go to the auditor, and auditor's like, hey, this is accurate. I did my job right. I did all these things. It's accurate. Okay, perfect. Can't argue with that, right? We already went through our steps and confirmed that they did accurate. Then going to the underwriter and saying, hey, underwriter, we need your help here. Like, you're our partner on this account. And here's the situation. This has been a long-standing account. It's performed well. It's been profitable for you. Here's where the discrepancy happened in this switching from sales or payroll to sales. And here's what our ask is. And depending on the underwriter's level, they may have to get management involved on things.
Yeah.
And if that ultimately doesn't work, then it's going to our marketing rep that we have, and talking to them and giving that same case. And what, again, spoiler alert for this particular client, we were quite excited in that we were able to get the marketing rep to say, yeah, hey, actually, this is a great account. And hey, we can see where this discrepancy happened. And we
Mhm.
can see where we, as a underwriter, did not communicate to you as the broker on that change in the rating basis. And this is an account that we already write other lines of coverage on, and that this is an account that has a large work comp renewal coming up that we would love to compete on. And this is an account that, we want to partner with you, Falcon West, on. And this carrier amazingly agreed to back out the audit for that prior year, back out the audit for the current year,
Mhm.
and back out the upcoming audit as well. So
Awesome.
again, so a client looks at this and is like, man, all right, stuff happens, right? Everyone who's in business knows that stuff happens. It's how do you react when that happened, and then how do you fix it? And so we took something that could have been effectively disastrous with this client, and we were able to figure it out. Client's happy. Client's like, yeah, these guys did what I expected them to do. That will certainly engender our relationship with them. The carrier recognizes that they helped us out. So guess who's going to get more opportunities, and
Right.
guess who's going to get more business with us. So again, from a business perspective, brilliant on their side. And again, they looked at, what was the intent here on this? How do we unravel something that wasn't inaccurate necessarily, but wasn't fair? And we're able to get things figured out. And then the last piece I would kind of educate people on is, you don't want to go down silently on any of these things. So if you're going through all these steps and you're feeling frustrated, reach out to a peer, reach out to another broker and say, hey, here's the situation. Is there anything that you would do different? Is there management with your company? So in this particular case was something that the broker had reached out to me. We had a phone call, we brainstormed, we looked at it, and I was able to give him a couple of tidbits that ultimately helped his case out on. So, um, to me, that is exciting. That's it's something that makes me feel good, and gives you that good team feeling. So, all in all, following those steps, hopefully that more often than not they'll come to a positive outcome, and you go from there.
Love it. Mike, I had another question I was going to ask you, but we're going to save it for next time because we are hitting the 34
Yeah,
minute mark here with this topic, and we'll keep it clean. So this is a great piece of educational content. I love just kind of documenting how Mike handles things, and we can kind of replicate it. So in the future. So great success for this account. Loved hearing those wins that we have as a team and just all the people that come together. So anyways, it's Wednesday. I'm going to get this off to to Carl Keen so we can get it edited, and we'll get it at everyone's hands.
awesome. Always great to chat with you, Peter. If anyone has any other thoughts or feedback on how they would handle things, and actually, I did put together a checklist of how to uh, basically the steps that we ran through here. So happy to share that with anyone inside or outside of our organization if it's something that's of interest.
Actually, I'll make sure that we get it up as an article for this week. So we'll post it up and we'll make it available on the website. So awesome.
Sounds good.
Thanks, guys. Until next week, get after it. Thank you. Bye.
Thanks.